Hi, today's topic name is the accounting cycle. The main idea is the accounting cycle is a series of steps done in each accounting period for 1 year. Normally we consider as 1 year to keep records in an orderly fashion. You can use a general journal to record all the transactions of a business. When we use the word all of the transactions, that belongs to cash, non-cash also. The steps of the accounting cycle looks like this. So we will investigate and check each and every step one by one now. Accounting cycle: activities performed in an accounting period that help the business keep its records in an orderly fashion. Step number 1, the basic step is collect and verify source documents. For any transaction occurred during the accounting period, we should have the supporting documents. That documents we have to collect as well as verify whether it belongs to our business or not. Step number 2, analyze each transaction. You have to analyze. What is the meaning of analyze of each transaction means? Is it a cash transaction, bank transaction, credit transaction? What type of sort of transaction it is? Then step number 3, journalize each transaction. In this accounting cycle, we are taking step number 1, 2 and 3. Commonly used source documents. So for this BBA MI International College, I am taking these 4 documents as source documents. First one is invoice, receipt, memorandum and check stub. We'll see the first one, invoice. It is a source document that lists the quantity, description and total cost of the items sold and shipped. Next one is receipt. It is a source document that serves as a record of cash and checks. The memorandum, a brief written message that describes a transaction took place within the business for the accounting period. Then check stub, which deals with the bank, all the checks written down and the checks which we have received or issued. This is the format of invoice, receipt, memorandum and check stub. So these are the things we have as a bookkeeper. Step number 2, analyze each transaction. We have to determine, is it a debit or credit, and is it to be written in the books or not, is it a business transaction or not. So we have to analyze. The next step in our accounting cycle is transactions are entered into journal. This is known as journalizing. So a journal, it is a chronological order of transaction of a business. Chronological order means one by one. That means according to the step 1, step 2, step 3, step 4. Chronological order. Remember this word chronological order. It is a technical term we have to use. Then journalizing. That means the process of recording transactions into books of account. Now we'll see the fiscal year or calendar year. Both are not same, but for some countries both are same. The calendar year starts from 1st January and ends at 31st December. The fiscal year or the fiscal year which they are following calendar year starts from 1st January to 31st December. For instance, if you take in India, it starts from 1st April to 31st March. The accounting period of 12 months, and the calendar year starting on 1st January and ends at 31st. Key terms: general journal. What is a journal? In journal we record all the transactions which cannot be written in sales, purchases, and cash book. The left column of the recording debits and the right column of recording credits. Now this is a format of journal. Then 7 steps determining each journal entry. Identify the accounts affected and classify the accounts. Then determine the amount of increase or decrease of each account and determine whether it is a debit or credit. Then you had to complete the entry in T format, then write in the journal. Why do business separate their accounting records into accounting periods? Business use accounting periods to make financial comparisons possible. Comparisons of business performance would be impossible if fiscal periods varied in a length, like if you take 15 months or 18 months, like that, very difficult. In other terms, almost all countries says that it is a mandatory to have the same fiscal year and same businesses in the particular. And here ends our topic. I hope you understand the concept of accounting cycle.